It seems like everyone says that you should invest ethically these days, but what does it mean to be an ethical investor? And does it really make any difference? Hey guys, welcome to the channel. Today I'll be explaining how ethical investing actually works, how you can do it, and why it can be a little bit controversial. So what is ethical investing? Well, broadly speaking, ethical or ESG investing is where you invest in companies whose values align with yours. So it could be for environmental reasons because they sponsor the same charities, or they simply avoid practices you don't agree with, like emitting large amounts of greenhouse gas. Outside of the stock market, you might also choose to avoid investing in, say, gold because gold mining is destructive, or Bitcoin because it uses too much energy to produce. Essentially, ethical investing can mean different things to different people. So when a company says it's offering an ethical investment, well, it pays to dig into what that actually means because it might not align with what you think it should. For example, there are dozens of ethical ETFs that do invest in the oil industry. They just have other reasons like avoiding gambling, pornography, or slavery to claim being ethical. You might have noticed it's becoming super popular among brands to label their products as ethical. And that's because the ethical badge brings in millennial eyeballs and their dollars. Not to be a cynic or anything. And in the investment space, ethical products are usually some kind of investment fund or portfolio. For example, here in Australia, there are over 20 ETFs that call themselves ethical, and there are many, many more in the US. And robo-advisors now all seem to have some kind of an ethical option. More often than not, those funds simply hold major companies that don't contribute significantly to greenhouse gas emissions. So they, avoid mining, oil, and gas companies. Usually this means they're a big list of technology stocks. For example, if you check out this BetaShares Ethical ETF, ETHI, it's mostly a list of some of the biggest companies on the NASDAQ, which in the last few years has seen some incredible returns. So when people say ethical investments are outperforming the market, often that kind of just means the technology sector is outperforming the market. So there are two main approaches to ethical investing: negative screening and positive screening. Negative screening is where you exclude companies that fail ESG metrics. On the flip side, positive screening is choosing investments with high ESG scores. So if you wanted to support the future of renewable energy, you could choose to invest in renewable energy companies. That's positive screening. Or by negatively screening, you simply avoid oil and gas companies. So does ethical investing actually make a difference? Like if you invest in a renewable energy company, can that company use that money to continue to expand? Well, not quite. Firstly, when you buy stocks in a company, either directly or through an ETF, your money isn't actually going to that company. You're simply buying stocks of another regular shareholder who is choosing to sell. So your money is going to other people like yourself. You buying up stocks does not impact the amount of stocks in circulation, for instance. But there are other ways it can help. If a lot of people choose to buy stocks in a company, for example, Tesla, the average share price will go up, which means the market cap will also go up. The market cap is one of the most important valuations a company has. And if the market cap and stock price is bigger, well, the company could cash in if they choose to sell some of their own shares, but if they do it too much, it's a bad signal to other investors, and it would help to drag the stock price down, which is what they don't want. But they can also borrow more money from the banks and raise more capital from private investors. The bigger the market cap, the more they can borrow and use for expansion. At the same time, if lots of people choose not to invest in, let's call them bad companies, their market cap would stay lower and they'd also be limited in how much they can borrow or raise. Another point to consider is that if you buy shares directly, you as a shareholder have voting rights. This means at every shareholder meeting, you get to place a vote on big decisions that could ultimately impact the world. In fact, shareholder activism, where people buy stocks in a company simply so they can force it to change for the better, is becoming a growing trend. For example, some activists own shares in Exxon simply so that they can use their voting power to transition the company towards a more renewable future. So where does that leave us? Well, ultimately, there's no right or wrong way to ethically invest. I do believe that ethical investing can make a significant impact on society and the planet, even if it is by avoiding companies that are harming the environment, or if you're choosing to hold, say, Exxon, making your votes count. Collectively, we're saying we need to be doing better. And even if nothing else changes in your life, it's not a bad start. That's it from me today. Thanks so much for watching. If you enjoyed this video, hit the like and subscribe button and leave comments. I'll try to reply. Thanks, guys.